Well, I'm back. Nick's not. There's a good reason for it, and I'll explain in a minute. It's not that Nick doesn't love us anymore. It's not because Roman did such a good job he doesn't want to be back. It's just that turns out here he is. Nick, welcome. Thank you for joining us. It's like daddy daycare around here. So it's school holidays, and as a result, there are kids galore in the Independent Reserve HQ, including mine.
And
you were dealing with them instead of me.
I know.
Because I had to be here.
Your kid now has 2 dads, I guess.
Well, you know, I won't take that joke there. There's always been, has there been speculation over who his real dad is? Speculation.
Yeah, speak to your wife.
Speaking of speculation is absolutely rampant. Not that Nick has left me for Roman, our CTO, to be a better host.
Well, really, you left me, and I had to scrape the bottom of the barrel, obviously, because no one can compare to you, Lee.
Thank you. Yeah, I know.
And I got our CTO, who actually was very good.
Well, he was very good. I watched actually. So I was watching last week from the pool. I logged in halfway. Actually, no, that's not true. I logged in at the beginning. I was watching. And I was like, man, Roman's good. He's so much better looking. He's got bigger muscles. This is a real challenge for me. Yeah. But then my kids were annoying me, and I had to go and swim in the pool with them. Anyway.
Yeah, you just had to go swim in the pool.
Had to go swim in the pool.
What a shame.
It was great. I had a glorious time up at the Gold Coast. So thank you, Roman, for stepping in. Not sure if you're watching. Oh, by the way, I stole some of your merch this week, so I've offered it back to you. So after this, I'll have to go and thank Roman at the same time apologise. So
no, he looked at the merch. He was like, "Wow, that's cool," and then he walked away. What do you expect?
Snooze, you lose.
Exactly. You gotta claim it properly. You can't just claim it by saying it looks cool and expecting no one else to touch it. Entire office not to understand what something you've said inside, to one person. Anyway,
that's right. Anyway, we will stop talking about that stuff. Let's get into the market news. So, man, since I've been gone, because I haven't been paying no attention whatsoever, because I've been, as I said, swimming and going up the Gold Coast and going on the rides and stuff. The Dow Jones hit new all-time highs, but despite that, Bitcoin is down. Yep. In fact, the crypto market is generally down. And we mentioned before speculation. So some of the speculation has been particularly around this market maker stuff, right? So there's been rampant rumours, unverified rumours, shall we say, at this stage that not only Wintermute, but a bunch of others are living now with the ghost of what has happened on October the 10th, the flash crash, which we've discussed in depth. And so a bunch of market makers are now sort of saying, well, look, hey, what's going on here? But, crypto volumes are down. 2/3 of what we have previously seen over the last period of time. So there's definitely been a reduction in the amount of volume going on, which, and there's been other market makers that have now been drawn into this speculation. So I guess we have to kind of unpack that and go, well, look, what the H is going on here? Because, this matters. Like the broader sentiment for crypto right now should be largely bullish. That said, there is some structural stuff going on right now. So the Fed has cut rates, as we know, but also the unwinding of the Japan carry trade has been probably, and this is where I want to get your opinion on it, is the unwinding of that Japan carry trade more impactful than what's going on with the market maker speculation, or a bit of a combination, a bit of column A, column B? But let's unpack that.
We can get to it.
What else do I have to go through in terms of our summary? That's it. I feel like that's this holding pattern that we're in now.
Yeah, I definitely think there's been a lot of, you kind of touched on it, there's a lot of positive news in the market at the moment. Like almost every day we're getting something interesting, constructive coming out of the crypto space. I've written some of these down because I can't remember them all, but so basically, so the things that are then
sorry, Nick, it's Merry Dispatchmas, and you can see we've got some Christmas cheer going on, but also we have this brand new tree, and it is kind of like really like as you can see, it's muscling in more than Roman did on my hosting space. It's like really getting in there. Anyway,
Like, put it in a headlock. You damn tree, I want to get you this time. Yeah, so there's been a lot of bullish stuff. It seems just constantly coming out in terms of like the crypto industry. So I'm just going to read off these things that I've written down. So major banks launching tokenized on-chain products, successful crypto IPOs, Pakistan looking to tokenize their sovereign assets, US state and federal crypto reserve news, ETFs expanding, regulatory clarity, payment infrastructure expanding. There's just constantly, we're getting these bits of news coming in where it's never sort of, I don't know, like country decides that crypto is a scam and bans it. Like it's always someone's implementing this, someone's looking at this, someone's doing something more on blockchain or crypto. So it's all this positive stuff coming out. As you say, like Dow Jones all-time highs, the stock market just can't be stopped at the moment. Everything's going up, including new crypto news, but crypto prices still somehow manage to be very middling. And we've kind of, a couple of weeks ago, we hit the low 80s. I think we sort of tapped $80,000 US dollars for Bitcoin. And we've kind of been bouncing between there and like 95, I think, $1,000 at the moment. We're about 85,000, which is the lowest we've been in a little while. But yeah, it seems crypto absolutely cannot catch a bid. What is the reason for that? You talked about sort of the market makers being in trouble. We've mentioned this before. There's obviously been rumors going on about various market makers who've possibly underwater thanks to the October 10th, October 11th flash crash liquidation event. So there was this huge event, for those of you who aren't aware, back in October 10th US time, where things just spiraled downwards very, very rapidly. When things happen quickly, people get caught unawares, and you get these liquidation sort of cascades happening, where people's positions, when they're long, for example, in this case, they get forcefully closed. And when you get forcefully closed, you're forced to sell your position, which makes the price go even lower, and blah, blah, blah. It just causes these huge crashes that cascade and sort of, culminate on top of each other. There's the suggestion that a bunch of market makers got caught out by this. There was some Binance stuff happening. There's rumors that Binance were, auto deleveraging incorrectly, which auto deleveraging is a process that happens when these liquidations happen, where if there's not enough liquidity in a market, they'll start closing other people's short positions. So people who have bet in the right direction get closed. Now, is that a bad thing? Is it a good thing? I think auto deleveraging is a necessary evil, but there's different ways to do it, and in certain scenarios, it can mean that people actually make a profit because they get closed, at the bottom, which is great. Whereas they may have just held the position as the crypto bounced anyway. So there's arguments everywhere about whether it's good or bad, but the claim is that Binance's auto deleveraging didn't work very well, and a lot of people got really hurt by it. We talked about Wintermute. Obviously, Wintermute have sort of come out and said we are actually better off than we were when we started. Like there's a lot of these rumors going around about how Wintermute's in trouble, but they're like, no, we're not. We're fine. No one's proving anything with real numbers at the moment, so we just have to take everyone at their word. And crypto people definitely love a good rumor, so these things get propagated really easily. But that's kind of one aspect of it. So there was that, the flash crash. Then people say, okay, when these things kind of happen, it takes weeks to months for the bodies to emerge, which basically sort of says, look, if someone is in actual financial trouble, we're not going to see it immediately. And so if we were seeing it, like in a scenario where someone was in real trouble, they would be selling down assets as fast as they could to make sure to fill the gap in their balance sheet, basically. And so I guess the price action kind of reflects that. It's not to say that it's 100% true, but we have to sort of consider, okay, the price action is playing out as if there are a bunch of bodies in the market and people are having to, cover these gaps in their balance sheet. The other thing that's starting to come up now, people are starting to talk about, is because we're getting to the end of the year. In the US, the tax year is January to December, whereas in Australia, obviously, we're July to June. In New Zealand, I think they're like April to March or something like that. It's different everywhere, but in the US, which is kind of the big one that most people care about, end of financial year is coming up, and when crypto prices are lower than they were when they started the year, which is unfortunately what's happening at the moment, we're like in the red when you look back 12 months. People start doing things like tax loss harvesting. So they'll say, look, I want to sell here. I can crystallize a loss and then use that as part of my tax. And so we're potentially seeing the beginnings of another wave of selling as people go, I better do this, harvesting to crystallize my position. So maybe we haven't seen the end of it yet. Maybe there's still a lot more pain to come as the US start tax loss harvesting, unfortunately, because the prices were so low. It's just this confluence of bad things that's sort of happening and really, really punishing us. But yeah, as I say, I honestly think like there was a lot of bad news, and I'd like to talk about the Japanese stuff as well, which is also bad news. I think that actually definitely plays a part in this as well. But just to sort of set the scene for everyone who's listening, there's actually pretty much everything else we're talking about is all good news, strangely. And just like I mentioned before, we're just having like all this good news stuff coming out of crypto. So I'll tell you what we'll do.
Can we
Turn it like that?
It's just.
And then you can put it behind you.
There we go. That is genius.
So there's a lot of good news coming out as well, but we just need to somehow make this translate into price action. And obviously the market is not ready. We need a few more, weeks of punishing, crushing, sentiment destroying action, and then maybe we can like turn this thing around. I don't know.
Yeah. Okay.
But yeah,
the beatings need to continue until morale improves.
that's right.
Nice.
Good quote.
Well, I'm glad. So Winnemute came out and sort of said, "Hey guys, stop this speculation," and which is a great talking point because some of the merch we received from Winnemute has been absolutely on point.
Shall we put it on?
I think we should because it's Christmas.
All right. Yeah. So like we have a Wintermute relationship, and they send us Christmas gear, which is awesome. I don't know if you can see it there.
It's pretty good.
Is it great?
And
yeah, I love their Christmas gear.
I'm gonna put it on
So
just so you can see. And this is what caused the. I mean, Roman said he said it's okay if you have it, but I know he wants it. Look at this thing. Look at this shirt. Oh, it's all right. Whoa. I mean, this is as far as Christmas attire goes. Obviously, this is a bit better for Northern Hemisphere than it is for the summer.
Yes.
But that's pretty pimping.
Yeah, that's such a good jumper. And sorry, just to be clear, in our relationship with Wintermute, we're not investors or anything like that. We just, we're a client of theirs. I'd say.
I mean, this merch is fantastic. This is absolutely on point.
Yeah, it's good. I love it.
It's like Space Invaders and Christmas mashed into one fun.
Is this where all the liquidity's going?
Yeah, that's right.
Into my jumper.
Spending money on jumpers.
So right now, I know everyone last week, everyone met at Roman, and right now Roman's filthy that I have this jumper and he does not. That was the joke before, but anyway, I guess you didn't see the jumper. But now you understand why there's debate over who should own this jumper. It's pretty good.
That's good. Is it the same on the back?
Yeah, it is. Okay. You can trust me on that. I won't turn around. Yeah, you can trust me on that.
That's awkward.
All right, let's get back into the news then.
Okay.
Skynet, great to have you back. I was watching from poolside last week, and to be honest, all I did was watching Skynet's comments come in because it was more reliable than whatever you were talking about.
Oh, come on.
So keep it coming, Skynet. Before we jump in the news, jumping in the first question, USDE says an Athena stable depegged on Binance on October 10th due to errors in their perp funding rate and their soft peg, and cascaded from there. Do you got anything to add on to that, Nick?
No, I remember this point.
I think we talked about this.
Yeah, USDE was one of the big ones, and I think from memory it was obviously a Binance specific issue because if you looked at USDE on Curve and wherever else, there was no depegging. It was just that they had there was some issue on Binance and it kind of started that whole cascade of all these different cryptos going down, and then Binance were using oracles of wrapped tokens. So instead of using the underlying token, they were using the wrapped token market as an oracle, and that's not the right way to do it. And so there was a bunch of learnings that Binance have done, and I guess they've changed the way that they show oracles. They've changed the way that they do this. The perp funding stuff with USDE. So I think Binance made a lot of changes off the back of this stuff. Good to hear. Yeah.
Oh, there we go.
So let me talk about Japan because that's probably the last, big bad newsy thing, and then we can kind of get onto the more positive stuff. I guess I want to talk about how so there's a lot of news at the moment about how Japan are finally unwinding this decade-long financial experiment that they've kind of been doing. So essentially for about 20 years now, they've had interest rates, or the cash rate has been at basically zero or even negative, which is, unheard of basically. Everywhere else you've got well positive interest rates. And they were doing it because they wanted to try and stimulate financial, like economic activity, basically. So maybe about 9 years ago, they started doing yield curve control as well. Yield curve control is where they forcefully ensure the yields getting generated from the government bonds. The way they do this is when a bond comes out, if you buy the bond, the price of the bond goes up and the yield of the bond goes down. That's kind of the mechanism. So basically the Japanese government wanted the bond yields to be at zero. So basically every time it got a little bit above zero, they just bought a bunch more bonds and pushed the yield price back down. And the market started realizing that this was almost like a permanent solid thing. So the market were like, hang on, if we know for sure that the yield curve control is going to force the bond price to be zero, basically the bond yield to be zero, and we know that they've got zero or even negative interest rates, it's almost a permanent thing. We can structurally just buy stuff there because it's so cheap. You buy the currency there, you borrow from Japan, and then you can use it elsewhere. And we discussed this the other week about how the carry trade works. So you then borrow, you then use that loaned money to buy something where the interest rates are higher, and you can earn your own yield that way. The reason they were doing this, as I said, because they're trying to stimulate economic activity. They were in a deflationary environment, so they were like, far out. We need to get this economy up and running. We need to make it start moving. So what do we need? We need some inflation in the system, because at the moment there's no inflation, there's deflation basically. We want people to have expectations of inflation, and we want wages to go up, because the wages were just sitting there doing nothing. So they started doing this thing with the express idea to pump wages, to pump inflation a little bit. Not crazy, obviously. You never want hyperinflation or large inflation. You want modest inflation, which sort of shows a growing economy. And so they decided to put interest rates back at zero, the cash rate to zero, do yield curve control. And they were just doing this thing for ages, and it didn't seem to be working, so they just kept doing it. And it became this thing where the market were like, hey, we can borrow there really cheaply. Anyway, fast forward to sort of more recently, and after COVID and the Ukraine war and things like that, they started essentially importing inflation. So energy prices, they have to import energy, they have to import food. And Ukraine war and COVID basically pumped the prices of energy and food. So they were having to pay more for that. So they kind of were importing this inflation that they didn't really want. You don't want to import inflation. You want to have it you want inflation to be generated due to the fact that people have a lot of money in your economy, and then they're buying stuff, so prices go up, and that's the inflation. That's kind of what you want. Anyway, so they were getting this weird, dirty kind of inflation by importing it. So eventually, fast forward to today, they're like, okay, we've got actual inflation now, which is kind of what they wanted, but it's not the right type of inflation. So they can't keep rates at zero, because if rates are at zero and inflation's up high, everything's bad, basically. Yep. So they have to increase their rates, but the whole market is sitting there relying on their rates being zero. There's so much money out there that's been borrowed in Japan, shipped offshore. Yep. And so now they've got this situation where the second they even raise their rates a little bit, so at the moment I think the cash rate's at 0.5%, which got raised maybe earlier this year. They started raising it, I think, late last year. They've just raised it. I think they plan on raising it again early next year to 0.75, so another 25 bips up. And even though these rates are still super low comparatively to the rest of the world, it's really just a signal to everyone to say, hey, this carry trade that you've been doing for so long is not going to work anymore. You can't rely on the interest rates, the cash rate, to be super low. So just beware, right? Like, you've got to now go look elsewhere. And yes, they'll still use the Japan carry trade because it still exists, because the cash rate is still so low. But you can't just rely on it. It's not just this structural thing that exists in the market, this tap that everyone can use kind of thing. Yeah. And so, that the problem there is that now that all of this money that's getting borrowed in Japan and used elsewhere for things, it filters down to risk assets like Bitcoin, crypto, whatever. And so when this goes away, everyone starts unwinding this carry trade, and next minute you suddenly get this repricing of everything. It's not just repricing of crypto either, it's repricing of all kind of risk assets. So everything's kind of just going to slot lower over time, and that's going to be the new normal price. So we've kind of had this elevated price. Everything's going to reprice. It's not a good time for risk assets. Japan are like in a really bad place at the moment because they're having to raise the interest rate when there's no economic activity. Like there's not like people have a lot of money around to pay these extra interest rates, and people aren't really doing borrowing and cash. Banks are flush with cash at the moment. They can't lend it out at the moment. No one wants to borrow. You know, the retail, like domestic market doesn't want to borrow it.
Yeah.
So it's not a good situation to be in. And
Yeah, Japan's really been a fascinating place for a long time. So I'm going to you know what? As much as I like the colour scheme, it's actually quite hot.
yeah,
It's quite hot under here. Japan's always had this high propensity to save. They've had the
you could have taken it off while I was doing my like 10-minute speech there about
I know,
Japan.
at any
but
point in
you
time.
waited until.
no. I wanted to make it as awkward as possible.
Yeah, cool.
They've got this aging population, this high propensity to save, and they've got it's just been a really difficult place for monetary policies.
Yeah.
So unsurprisingly, it's been a testbed for kind of almost extreme monetary policy and trying new ideas.
Yeah. I don't think they're sitting there like seeing what sticks kind of thing, but they've kind of been forced into this position, and now that it's unwinding, like it's unwinding at the worst possible time.
For crypto.
For everything really.
Yeah,
Honestly,
yeah.
it's not just crypto that's going to get hammered by this thing, or it's going to get repriced by this thing. But anyway, this is something a lot of like economists have been yelling from the rooftops for a while now. I remember like maybe 2 years ago, people were like, "Oh, the end is nigh," dinging the bell and whatever, and nothing has specifically happened. But with each sort of ratchet of the cash rate that Japan does, and they've kind of signaled to the market, we're not stopping. We've got to keep putting it up.
We're going all the way to 0.5%.
Yeah, that's right. But I mean, that's a big deal. Like that's
I know
that's
it's
for those guys when
off
they're so
zero.
used
It's
to
an
nothing.
exponential
Yeah.
kind of increase.
They're at 0.5 at the moment. Yeah. So they're going
Don't
to go. I
stop
think.
until 1%.
One part of the newsletter that I did is the consensus is going up to 0.75%.
Yeah, that's right. So early next year, that's
Huge way.
It
Yeah.
depends how much you buy. I mean, it's double. If they go to 1%, it's kind of double the rate. Like, anyway.
yeah. Anyway, should we move on to slightly more?
Well,
Happy
yeah, we
news.
should. I mean, there's been, as you mentioned before, there has been an undercurrent of amazing news for crypto in general, and for those who are enthusiasts and want to see a real merging of the TradFi world with the crypto world. We're now getting it, and it's happening in stealth, I guess, because it's not salacious and it's not meme coins and it's not crazy, headline grabbing stuff. It largely gets missed. But tokenization, as we've mentioned for many weeks now, has been the theme, and there has been some dramatic movements in that space. JP Morgan's launching a fund. Which one do you? In fact, the question is not which bits of good news do you want to talk about. It's like which one do you want to talk about first. I would have thought even though we're not sticking directly in order here, the DTCC has basically paved the way to allow the tokenization of stocks. Like it's a safe. There's now a sandbox, a regulatory sandbox, whatever you want to call it, safe space to go and tokenize everything effectively, which is going to allow a stack of access, 24-hour access, and all this type of stuff now. How do you want me to introduce this thing? So there's a lot of detail here, a lot of acronyms. I'm not sure how you want to put it, but let me read the headline, and we can take it from there.
Sure.
Which is the SEC has issued a no action letter, which is I mentioned before the paving of the way, the safe space, that clears the way for here's the mouthful, Depository Trust and Clearing Corporation subsidiary, the DTCC,
DTCC.
to tokenize assets on pre-approved public blockchains for 3 years.
Yep.
In short, saying, hey, if you want to experiment with tokenizing stocks, now you can do it.
Yep. So this probably, and I'm glad you picked this one because this is probably the biggest news, I reckon.
Totally.
It blew my mind.
Yeah.
So DTCC and the DTC, annoyingly, like a subsidiary of the DTCC is a DTC. Like, come on, guys.
Come on.
But basically they are like the settlements clearinghouse for something like $2 quadrillion worth of stocks, funds, whatever.
You didn't just make that up. That's quadrillion.
Quadrillion, yeah. It's not. That's a real number. It's more than a billion. It's more than a trillion even. Yeah, should we do this one? Yeah, 1 quadrillion. There's a number to think about. Yeah, so they do huge numbers. They're obviously like the backbone of the trading houses in the US, right? They just do everything. 2 quadrillion is a massive number, and they've essentially been given the go ahead to start looking at blockchain and not just tokenization, but using the blockchain for settlement processes. This is something the ASX in Australia actually looked at a few years ago now, and I don't think they ever got it off the ground. But not to say the DTCC have like managed to do it yet, but they're basically going to be looking at a select number of stocks or whatever to throw on the blockchain and use that as a clearing and settlement layer instead of doing it the traditional way, which can usually take like T+1, T+2. They're with the blockchain, they're hoping to get it down to instant, basically, where everything happens on a computer and it's all like contracted and prescribed. And if they, if this is a successful trial, and they start putting more and more, and eventually everything on there, that's massive. Right?
It's huge. It's huge.
It's such a big deal. They're literally using blockchain to make things better and faster and stronger. How will it translate? So the interesting part for me here is that they've been given the go-ahead to use public blockchains. I would always have assumed that they'd use some private blockchains
permission
to do
ones.
this. Exactly.
I mean, this is like a perfect segue into giving my. Oh, it's not a segue. It's just a quick side note that this is like a plug for like our Aussie-owned Red Belly networks, for example, private permission blockchains that would be ideally suited to this thing. But I think the comment that only thing I would add, and I don't mean to slow your roll, but it would be around. They haven't really specified exactly which blockchain it'll be. So there's still some speculation. A lot of people sort of obviously suggesting Ethereum. I think Skynet, thanks for making a comment there, has referenced a few specific sort of ERC protocols that may be used. But I guess the other ones in there, Link, Ondo, some other names in the tokenization space probably get a mention here.
Yeah. I don't think, as far as I knew, they hadn't actually said we're doing it on Ethereum. The approval from the SEC was public blockchains. So I would imagine they're probably going to maybe trial a few out and see what happens. If Skynet is to be believed, and he always is, there's a specific ERC 3643 that would be used here. Not to say that whatever that protocol does couldn't be developed on some other blockchain as well, but I think it'll be pretty. I would be surprised if they didn't do Ethereum. Like everything is kind of pointing at Ethereum for these kind of projects. Imagine if they did it on Solana. Oh man, can you imagine the smell? That'd be pretty interesting. But yeah, so we'll have to see what they actually end up doing. But I think this is massive. This is so big. Like if they get this thing off the ground and they prove it and it shows to be useful and beneficial, that'd be so good.
It would be very good. I saw some stats this week around the usage of Solana, and I know Solana Breakpoint happened just recently, and there's some stuff we'll get into about some of the upgrades and stuff that are happening there for the L1 community. But I guess what was interesting was at the beginning of the year they referenced some 5.5 million active users or whatever on Solana, and now it's down to 500,000 or something like that, 600,000, which coincided with the end of the meme coin boom. It's like as soon as the meme coins floated away, it was left with the rump of not the rump, it's the core group of users, which is very different to the transient users who come on for whatever hype's going on that particular chain. Yeah, I'd be interested to see sort of how that stacks up against other chains.
True. Yeah, I'm not sure of the stats.
But anyway, with this whole the DTCC thing, that is a mouthful. But like as you say here, it's effectively the clearinghouse part of the TradFi exchanges, which would be which is opened up now to using a different clearing mechanism for stocks. So the stocks that they would have would be the same, just on a different platform, effectively.
I think it's also really interesting for the people using it as well. So if you imagine that you're like doing trading and you need to put down some collateral for a trade, and then you have to wait 2 days for the trade to settle before your collateral gets released. On this kind of thing, suddenly your collateral is only locked up for 10 minutes maybe or less, who knows, like however long the process takes. And suddenly you've got this huge increase in capital efficiency.
Yep.
You can now use your money multiple times a day to lock up, and perform trades and whatever. And so I think like it's not just the DTCC is sitting there going, hey, this would be cool, we can make things a bit quicker. It's everyone using it really gets a benefit out of it too. Yeah. So because there's these, forces from both sides, it seems like a no-brainer to me. The DTCC also they're in competition with banks, I suppose, as well, so the banks can do their own settlement and clearing, and if the banks start using blockchain and doing it better than them, then a bunch of these things are just going to move off there and into the other rails.
There's an analogy here, and I agree with you. The fact that the capital is not locked up and the efficiency capital means there's going to be increased liquidity. The 24, the fact that there'll be like extended trading hours because it's now 24/7. You know what I mean? All these things. So you'd think that just the fact that you can trade 24/7, less manual error, less input to make this thing work efficiently, more liquidity, right? All these types of things. There's a great scene where I think it's David Letterman or someone like that who was interviewing Bill Gates in the early days of the internet, and David Letterman is kind of taking the mickey out of like Bill Gates, and Bill Gates is going, the internet's really cool because like, and he's trying to give all these examples of why it's cool, and he's like, you know, like you could get like real time updates of your baseball score, and he's like, well, then David Letterman's, well, but don't we have the radio for that? And everyone laughs, but everyone's laughing because like Dave, like at the time, given the context, people were kind of laughing at David Letterman poking fun at like this guy for sounding ridiculous. And he's like, you know, and Bill Gates was talking about how like you'll have all this access to all this information. He's like, that sounds a lot like my Encyclopedia Britannica, which in hindsight sounds like
so dumb.
Sounds so dumb, but everyone laughed. Not laughing with
They're
laughing.
like, it's so true.
It's
laughing,
like, oh, David Letterman's got him again. Like this thing is stupid. Right. You know what I mean? And it's kind of like in hindsight, it's like, what was everyone laughing about? Like Bill Gates was right. Couldn't you see that? But it's a very, very, I feel like it's very analogous with that sort of situation where the people who haven't quite seen the benefits are kind of go, why do we need this new thing for? Because, you know, we trade between 9 and 4 p.m.
That means I get to have a weekend. Actually, there's going to be a lot more mental illness in the market, I reckon. Once the market goes 24/7, you're going to see why the crypto people are so strange.
Bitcoin After Dark, yes. Great segue. Thank you, Jared.
Yeah, I like this one.
This is good. The Bitcoin After Dark ETF,
tell
which
us
is
about it.
fascinating. Well, it's a proposed new ETF, I guess, the Bitcoin ETF. Plans to hold only Bitcoin ETFs and derivatives for overnight and to sell ahead of the US market openings.
Shall I explain, or you got it?
Well, no, you explain. But the thing is, it's called a Nicholas Bitcoin and Derivatives After
Nicholas,
Dark ETF. So obviously, it's your thing.
Yeah, so that's why I was hoping to explain it, because obviously I'm trying to pump my own bags here. If anyone would like to buy my Nicholas Financial ETF. No, this has nothing to do with me, just happens to have the same name. These guys have basically looked at the market and done a bunch of back testing and realized that if you were to buy Bitcoin when the US market closes and sell it just before it opens again the next morning, you can, like historically, you would have made 222% on your trades, which is a pretty massive amount for a trade that's just so simple, right? Usually if you're going to do that kind of thing, you need leverage, you need this, you need that, you need to get really tricky with models and blah, blah. These guys have figured, hey, this is such an easy trade. Why don't we make an ETF that does it for people? So people put their money in, the ETF just automatically sells, half an hour before open and buys it half an hour after close or whatever. And that's why it's called the After Dark ETF. Obviously, you can buy it and get people to trade for you, essentially. I think that the thing I liked the most about this one, though, is it's the company that's proposing this ETF is called Nicholas Financial, and their logo, it says Nicholas Financial Incorporated, so their logo is NFI. And I'm not even joking. It's literally, you can see it's a NFI. I'm like, you kidding? How could you get away with that? Why would you? Do they not know what they're doing? There we go. We're gonna get it up on screen. This isn't.
But only the online nerds are gonna care. Not everyone will get that.
Yeah, maybe. I don't know. You got it.
Welcome back, Lou. You're a dickhead.
There we go. Classic. It's a cool idea. We'll have to see how it plays out. I think I've seen a couple of these kind of more obscure crypto-related ETFs don't usually pan out that well. But good luck to Nicholas Financial. Obviously, they've got my thumbs up. Oh, I'll do this thumb because you got covered.
Okay. I guess a lot of, I guess, the biggest challenge for a lot of these new projects is not necessarily the idea, and you see this in crypto all the time. There's a lot of stuff you go, oh, that's actually a really good idea. But getting the liquidity and getting the eyeballs onto your project to actually make it a viable commercial product is very different.
Yep.
Good ideas, there's a good idea graveyard where not everything deserved to be in there. But
I mean, I imagine we wouldn't have spent nearly as much time on this topic if their logo wasn't NFI, because I would have been like, yeah, that's cool. Anyway, let's move on to the next story. So I wonder if they did it on purpose.
Yeah,
They're
they
like,
need
this is
some
how they
meme
get the
factor.
eyeballs.
They need
right?
some. They need some
yeah.
eyeballs.
Well, I mean, as well, when you say After Dark, any kind of show that has an After Dark version of itself is generally the salacious one. So
Yeah,
Big,
that's true.
Big Brother, After Dark.
Any
That's
others?
all I can think of, but-
Wow, Jared, you're looking really white today, by the way. I mean, you're normally quite white,
I
but
was born this way.
yeah. Anyway, I guess I would like to say we'll track it, but I don't think we will.
No.
But if it goes under, we'll probably talk about it later. Hey, we didn't do the clapper. We forgot.
Oh.
were you planning on doing this?
Well,
or-
I'm rusty. I've been away.
Yeah, I mean, I forgot about it last week as well until halfway through.
Edit
Yeah.
in.
Yeah, hi, welcome to. Yeah. What's next?
Crypto banks are coming. Crypto banks are coming.
Crypto
not
banks. Yep.
Yeah. Okay. So this is interesting, right? A bit of context into crypto banks in general. Anyone who has tried to move, who deals in crypto either as a business or particularly as a business, as a startup, even individuals who try and move crypto at a relatively large scale will know that one of the largest obstacles to doing crypto or buying crypto or participating in crypto, working in crypto or trying to is actually the on and off rails and actually having relationships with banks. And
Agreed.
right, it's the number one issue with a bullet. And it's
Final
so
frontier.
and it's the final frontier, as we've mentioned a bunch of times. And it's the idea gets floated. I swear, every 6 months, someone's like, "Well, why does crypto now get together and just buy some crypto-friendly banks? People who get it, right? It's a great idea." Well, maybe the time has come. So there is now talks. Okay, early stage, and I know I can see you bit your tongue there. I'm surprised. If you can talk after how hard you just bit your tongue, I'll be impressed. But there is potentially some good news coming. So there has been a conditional national trust bank charters approval, I guess, for these charters for Ripple, Paxos, BitGo, Fidelity, and Circle.
Mm-hmm.
Okay, very limited, and you can't actually necessarily use these in the same way you traditionally use a bank.
Yes. Right.
But it's the first step in a long journey.
Okay, you're really looking far, far down the line here. But yes, now I'm with you. I was wondering how you're going to tie this back in because this specifically, what's happened here is specifically not deposit taking, which is kind of what you began with.
Well, every journey begins with the first step, Nick.
Oh, damn.
Did you not know that?
Yeah, wow. I'd never thought about that.
Well, not wheelchair races.
Ooh. Technically true. Yeah, so I guess let's talk about near term what's actually happening, and maybe we can then telescope that out to what could happen in the future. But basically, those companies that you mentioned, BitGo, Ripple, Paxos, Fidelity, Circle, was it?
Mm-hmm.
Have got this new kind of pseudo trust banking style license that allows them to, at the moment, really just sort of custody stuff at a institutional level, I suppose. So they can't take deposits from customers. They can't originate loans. They can't do any of the normal, bread and butter stuff that actual banks do. But this is definitely more than they could ever do before. And what it allows them to do is play in the institutional space, at least at the moment, for custody. This is where I see it as the big win here is that they can go, okay, we can be officially recognized as a custodial organization, and they can do things like be a custody for an ETF.
Yep.
And ETFs are obviously all the rage at the moment, and have been for a couple of years now. But if you can become like the first guy who has an institutional regulatory path to being a custody partner for one of these ETF companies, you're kind of set, right? Like they dump a whole bunch of funds on you. Like in this case, it'll be Bitcoin or crypto or whatever, and it's sticky. Like it doesn't go anywhere. These ETFs, yes, they have inflows and outflows, but they have they've got billions under management, kind of thing. And so, yeah, if these guys who are now who now are working under this regulatory, I don't know is it a sandpit? I think it's legitimate. I don't think it's actually a sandbox or anything. I think it's just part of the what was it, the SEC or whoever?
Yeah.
Was it SEC?
FDIC?
No,
that's
FDIC
insurance.
is
That's insurance.
yes. The SEC basically said, no, the comptroller, the Office of the Comptroller guy. They basically said,
Yeah, that's right. The comptroller of currency or something.
of currency, yeah. they basically said, yeah, you guys can do this, and approved these 5, and they're not banks, but they're kind of sort of banks now, thanks to this approval that they've got. Yeah, and they can do all this stuff. And yes, it could be absolutely like a first step. They're now sort of in the perimeter, and they'll be pushing hard, obviously, to expand this perimeter of this banking sort of regime, to allow them to do more and more, and maybe eventually one day take deposits and be an actual crypto bank, do what Custodia has been trying to do for years. And I think that'll be awesome. But yeah, this is, again, such a big piece of news. Like, these guys they're now sitting within the regulatory framework. They're legitimate. They've fully been legitimized by this.
Yeah, absolutely.
And so I guess for me, step one is they're going to be trying to take like ETF custody stuff. But who knows what step 2 is going to be. It's been really interesting.
And as Larry said, the step 1 was always the ETFs. They were only ever just the first step, right? And the tokenization is the real big play that's going on, right, generally speaking. The only thing I guess that I would add to all this, right, and I know this kind of ties into our next article, which is on JP Morgan launching a fund on Ethereum, a money market fund called Money, which I'd like to discuss with you. Now, forever and a day, people in crypto, maybe not everyone, but a lot of crypto enthusiasts, how do I put this? The general vibe on crypto Twitter, right, would always be, the institutions are coming. But eventually that day would come, and they would probably not like necessarily what the institutions did with their crypto. And it may lead to the same case where all the institutions go, hey, actually this tokenization stuff is really great, but you still don't get a bank account.
Yeah,
right?
That's right.
And I've always sort of been wary of this when people in crypto have always been like, let's pull for regulation. That's going to be great. It's like, well, what kind of regulation? Will it necessarily be good for you?
Yeah.
And all this kind of stuff right now. So I think it's a good step. I mean, the good actors in crypto who are trying to, merge and do good work in the crypto space and have good quality controls. I think there was this overarching sort of, never say overarching, or just a gap in the vibe. I don't know how you want to really describe it, but people were kind of saying, hey, regulation's coming, we're all getting bank accounts. No. You're still going to have to run high quality businesses. You're still going to have proper checks and control.
Of course.
You can't just be loose and do whatever the heck you wanted to, and then get banking. Like, it never worked that way.
Yeah, and I think this is that's an important point if we sort of look at independent reserves history and journey in this space. This is something we've always tried to do. So we've basically gone to so many of the banks and said, look at our processes, look at our procedures, look at what we do, look at the efforts we go to act as if we are working in a regulatory environment. These are the things we would want to see in regulation, and we hold ourselves to the highest standards. Give us a bank account, and they don't want to do it. And so, I get it. They don't understand the space, and they've got their risks and whatever to manage. But as we get the regulation, and it becomes easy for Independent Reserve in this example to sit in that regulatory space because we already do everything that's required. That's when we kind of are going, okay, now we can get these bank accounts much easier because the banks go, okay, cool. They can trust that, because we're getting audited and all this kind of stuff, we are doing the right thing. Yes, you're going to have a bunch of punters out there that are doing the wrong thing, and when then these regulations come out, they're like, hang on, I thought it was going to be easy. Like, now that we've got regulations, it's like, no, you've got to work just as hard as all the other people out there, the other non-crypto related people to keep your bank accounts, basically, to stay within the regulation, stay within the framework. But yeah, I think this is something that, all of the players in the space that already do the right thing, it's going to be easier for them. We just have to wait till the regulation actually gets here. Definitely further ahead in the US. Australia, we're finally talking about it. I would also like to just go back. Skynet has corrected me on my pronunciation of comptroller. I prefer to say comptroller, even though apparently it's just controller, because comptroller is fun. Like you're trolling. Like, who doesn't want to say it like that? And it's such a funny word too. Anyway, the FAP controller. Yeah.
Now that we're talking about comptroller versus controller, like, is a comptroller the same as a controller? I mean, they're different words, really. There's a different letter. Is it the same? We'll
wait for Skynet to come back to us on that.
It's written by the same guy who decided on the spelling of Worcestershire.
Yes. Is comptroller just another way of saying controller but cooler?
So
less cool?
This is what Google says.
Oh wait, gee, we need the microphone. We've got a Google fact check on this.
So according to Google, controller without the P, like controller, is usually in private, for-profit companies managing daily accounting, while comptroller is typically in government, non-profit, or public sector roles focusing on public funds and regulations.
Hey, there we go.
Okay.
Public one's private. Yeah.
He said, Skynet says a comp part comes from some stupid French word for account. Compte.
There we go.
Contrôleur.
Man,
There you go. You learn something every day.
this is why it's make it so difficult for people to get into the industry. They make all these stupid rules that don't advance anyone's understanding of the situation, and then laugh at you when you get it wrong. Yeah, I do like putting on a French accent though. That's a bit of fun. Makes me sound smarter. Yeah. So, shall we talk about the JP Morgan?
Yes. Okay. So everyone knows JP Morgan, US bank, has announced a new money market fund launching on Ethereum. Shares on the so let me get this pronunciation right. My On-Chain Net Yield Fund, which is
Money
short
on,
for
yeah.
money, will
Yeah.
be issued and tracked using blockchains using JP Morgan's own platform, Connexus platform. With minimum investment of $1 million, so it's not just for the regular punter, but it'll be the first tokenized fund from JP Morgan and is the largest, I guess, globally systemically important bank to launch such a vehicle.
Yeah, yeah. I think a lot of this is sort of for me signaling and less about what they're actually doing. They've picked Ethereum again, like we were talking about this before. That's probably the most interesting part for me. Otherwise, yeah, it's kind of I think we spoke about this last week. So last week, one of the news articles was about Charles Schwab finally playing in the crypto space. And it was sort of more about them going, all right, we'll let our customers, do some investments here. They're not looking at actually tokenizing anything specifically. But Charles Schwab were kind of like one of the last of those big guys to actually finally, condone the idea of crypto. JP Morgan have been okay with it for a while, but there's always like the background noise of Jamie Dimon and his hatred of crypto, which I find hard to get over. But the fact is, I think he's commercial and just said, look, I don't like it, but everyone seems to want it, so I want to make money, so he'll allow people to do it within certain rules. Yeah, so I don't know. I don't think there's too much more to talk about on this one. It's obviously for the big players. You won't be able to. Not anyone can just buy the token on Ethereum. It's sort of
Well, you can if you've got $1 million.
Oh, well, I mean, I'm sure there's other hoops you got to jump through, but it's not just like you hop onto Uniswap and away you go. Yeah, but it's cool. So again, more just positive news for the market. Like we were talking about before, it's just another thing that's getting integrated and people are doing stuff with it, and it's cool.
Hey, just as for your own personal opinion, when people talked about the institutions are coming, and remember that back in 2021 it was a big theme, right? And you'd always talk about it, and every 2-bit influencer with an account would be like, I know because these guys who talk about it, like they claim to have all these inside information, all these people, and they're always like, it's coming. I've been talking to important people,
Yeah.
and I know that they're coming. They never specify who exactly that is, but these people are coming.
Of course.
Were they anticipating that this is the way that they would be showing up? If you cast your mind back,
no.
are we now getting what people were promising us?
I think there was a bunch of vague hand waving when it came to, what it actually meant for institutions to come. From my perspective, I kind of assumed it would be along the lines of the treasury companies. So, that seems not like a tangible thing for me. Treasury companies going, we have to diversify where our money is held. Some of it's going to be in property, some's in an index in the stock fund, and some of it should be in something like a hard money, like gold. But it's a lot of then they might decide that Bitcoin is the new gold, and they diversify into Bitcoin, and that's kind of where I saw it coming. I feel like the sort of, I don't want to say logical conclusion, but the outsized example of this where someone's just gone absolutely crazy is this, MicroStrategy, the strategy company, where they've gone, you know what, we're not just diversifying into Bitcoin, we're doing all Bitcoin, and we're going to sell shares to buy more Bitcoin, and we're going to do every little trick in the book to raise money to buy Bitcoin. In fact, I think they bought another $10,000 of Bitcoin, 10,000 Bitcoin a couple of days
recently.
ago, which is just crazy. Again, we spoke about this last week. Prior to last week's 10,000 Bitcoin buy, they'd been buying in like 100 Bitcoin, 130 Bitcoin, like tiny little buys, or they almost sort of swept under the carpet because they were a bit embarrassing. But they're back, baby. They're buying like 10,000 Bitcoin. I think last one, a couple of days ago, they bought 10,300 Bitcoin or something.
Not mucking
which
around.
is which is pretty big numbers to be buying. And just imagine what the price would be if they weren't doing this. We'd be like, the price would be like $30,000 a Bitcoin or something. I'm making that up, but like, these guys.
Do you reckon there's do you reckon Michael thought that more people would be piling in after him?
I don't know personally. I know publicly he would claim he doesn't care. He's buying for the long term and doesn't matter what the short term price movements are. He doesn't, as we've said multiple times, he always buys the top, right? He doesn't sit there and try and time the market. He's playing the whole time in the market is more important than timing the market. Anyway, we kind of went on a bit of a tangent there, but that's where I saw institutions are coming. I didn't see them. I wasn't really looking at the whole. They might use blockchain or a private blockchain to transfer value from one computer to another kind of thing. That wasn't really my view. Obviously, that doesn't really pump your bags when someone's using JP Coin or whatever. I don't know. I guess I don't think people were thinking about RWAs and whatever. They were just, I'm assuming, thinking
Just come and
more
pump my
direct.
bags.
Yeah, more direct correlations.
I feel like last cycle you'd have a chain mentioning the possibility of a meeting with a bank or an institution, and prices would pump 20%. Now you get actual partnerships, actual plans, and real things, and the market goes down.
Yeah,
So I'm confused.
definitely in the mode where like good news does nothing and bad news tanks, and it's not a good mode to be in.
Yeah, it is.
Oh, it
Well-
depends. Unless you're short, then it's great. Whatever.
Well, okay. Speaking of good news that keeps flowing, Solana's Fire Dancer is now live. Time for you to nerd out on some technical stuff, Nick.
Yeah, we spoke about this one briefly last week as well.
Excuse me while I pay no attention.
Yeah, so
You missed me, Nick. Don't pretend like you didn't.
yeah, fire dancer. Okay. So last week we kind of spoke about the number of Solana validators were quite low, and the reason for that was sort of around the cost of validating these days is quite high. The emissions from Solana are getting lower and lower as it sort of as the tail end kicks in, and you have to post something to the Solana slot. Every slot you've got to post something as a validator, which is pretty expensive. So FireDancer is something that it's a new validator client. So every proof of stake network has a validator client, which basically validates the blocks that get proposed. In Ethereum, we spoke about Prism, and I think Lighthouse is the current top validator, but Prism, which holds 25% of the validator count, had a bug last week that caused some issues after the Fusaka update. Fortunately, there's only 25%, so it didn't cause any problems. But if we were to rewind like a month, in Solana land, there was basically one client, which is the Agave Jito client, which is built in a programming language called Rust. FireDancer is the first time that someone's come along and built a Solana validator client from the ground up. Started completely fresh, didn't just sort of fork it off the original Agave client, which most of the existing ones have done. And so the good news here is that we've got actual client diversity now in Solana. Previously that didn't exist. So if there was a bug in Agave, the entire network would go down because everyone's using Agave. We now have this bit of client diversity. I think something like 20% of clients are flipped over to FireDancer. It kind of makes sense because FireDancer, as I say, it's been written from the ground up. They've really done a lot of work parallelizing stuff, making sure that the bottlenecks have been smoothed out, and they've looked at every part of the process that slows down the act of validating and done their best to make it smooth and whatever. And it seems to have been working. So they've kind of had this partial deployment for the last, 6 to 12 months or something, where they've been using parts of FireDancer, but then using the rest of Agave. And that's been working fine. So finally, a couple of days ago, they released the full version of FireDancer to the market. and it seems to be working pretty well.
Seems to have increased the overall transaction speed and a few other things.
Yeah, so theoretically, they can go up to 1 million transactions per second, 1 million transactions per second. But at the moment, it's sort of hovering around 1,000. Yeah, anyway, I don't know how exactly it works. Is it because we don't have enough transaction activity? Like there's no need to go to 1 million yet? Or is it just because...
This is the point I made on a little bit before. If you look at Solana in particular, the amount of active users has dropped. I mean, TVL's dropped, amount of active users has dropped. And I suspect that has a lot to do with the fact that meme coin period finished. Yep. So we yet to sort of get some real testing. To see some real testing.
I think that, all the tests they've done so far have been sort of fake tests in a way. Like I don't think they actually post anything to the market, or maybe... I can't remember how they do it, but it's not a real...
I seem to remember when there was stacks of activity around the meme coin sort of phase. When was that? Sort of roughly early in this year? I can't remember when was it, or was it late last year? I can't remember. There was a period, remember the meme coin stuff, and there was like some stupid amount of pumped up fun. Yeah, the pumped up fun days. There's a good sort of 2-3 months where things were just going crazy. I'm pretty sure, in fact, it might have even been a bit longer than that. Yeah. Might have been about a year and a bit ago,
casino season.
Yeah, a real casino season. And that would have been a really interesting time, because I know that there was so much activity at that point that there was a bunch of Solana shut down a bunch of times.
Yep. Yeah, and there was also like slowness issues, and people couldn't get transactions through, and there was all this kind of stuff. And I don't know specifically if Firedancer solves these problems, but it's definitely a good move forward. There's nothing like this is the right way. They need to do this kind of thing. You need to get client diversity, because as I say, like one bug could take down half the network. Well, now it can. One bug previously could take down the whole network, which is not good. Having said that, Agave is pretty well established, and hopefully they've ironed out most of the bugs, and hopefully we don't see any crazy bugs come through on Firedancer, because it's obviously a very new client. But it's interesting. I think wait and see.
Firedancer.
What else we got?
I did actually listen, Nick. I was just joking. So I know you like, and I know like the technical stuff, and most of it goes over my head. But I think I understood that. Don't ask me any questions.
Last week we were talking about how the number of Solana validators was on the way down. Do you think this will impact that?
Yeah, good question. So I did have a brief look at that recently. So the number of Solana validators was at 800. I think it's sort of pumped up to like 850. It's maybe now around 820 or 30 or something. So it's still kind of hovering. Unfortunately, Firedancer doesn't do anything amazing like allow smaller players to suddenly start validating. Historically, the Solana validation bottleneck was hardware. So you needed some hectic hardware to actually, and you needed like a serious internet pipe and all this kind of stuff to actually be a validator. That still exists. You still need good hardware. You still need really proper institutional level internet pipe to your validator to actually send all the data that you need to. What this basically allows you to do, like this Firedancer will allow existing players to scale better, basically. So if they want to scale up their operations, this allows them to do that with the hardware they have, rather than having to buy again. But it doesn't mean I can just start up a Firedancer on my laptop and boom, I'm a validator.
Gotcha.
Unfortunately, it's still, and that's the thing with Solana, right? There's the blockchain trilemma that you got to kind of always worry about, and decentralization is one of them, and Solana, that's where Solana kind of falls down. So they've got such a fat client that it's decentralized. Like you can't really get 1 million people running it. You need proper like organizations with backing and whatever running it. And because as we were talking about last week, the number of validators is going down. That's just because of the cost of running this validator is just going up and up and up, which is kind of the opposite for decentralization, right? You're getting more and more centralized as the emissions go down, so it becomes more expensive to run a validator, which is a shame. But I mean, the network itself is like Firedancer is good for the network and it's good for the validators. Does it increase decentralization? I don't think you're going to see anything meaningful.
Gotcha. Okay, that's interesting.
No, it's not.
Take it back.
You don't care.
Well, I do care, Nick. I care deeply about the tech stuff. It's not true. I don't. No, but it's
you're not in it for the tech.
No, it's not. I actually, to be honest, I find it fascinating. But I just it's I guess I'm interested in the implications more than the tech side of it.
Sure.
if I have to,
No, no,
if I had
that's
to,
okay.
if I had to pick one area to really enjoy.
We can make it our thing, like the odd couple thing where I like talk about tech and you're like, I hate this tech stuff. I'm not in it for the tech. I'm in it for the results.
I'm in it for the
And you're
revolution.
like, how do you think you get the results, man?
That's
it's through
true.
the tech.
Oh, what have we got? And Jared's going to pull up some DeFi Llama volume for us. Here we go.
I saw a post last week from Cointelegraph saying that Lighter had flipped Hyperliquid for 24-hour perp futures DEX volume.
Okay. That's
Well,
pretty
that-
And I was just checking to see if that's still the case.
I would, okay, just with that, I mean, they might have flipped it, but it also, Hyperliquid may have reduced. So here's the thing, it might be higher, but not because it's definitely caught over, it's just might have been Hyperliquid. Because there was, again, we're getting back to the initial stuff that we talked about, there was a lot of speculation about a lot of market makers, including market makers, people trading on Hyperliquid, who were the ones who were in trouble, which meant that we had seen a significant reduction in the amount of volumes across, of which Hyperliquid, I suspect, would have been one of those platforms that.
Well, according to DeFi Llama, we've actually got Hyperliquid in number 3 for the last 24 hours.
Who's-
Lighter at number 2 and Asta in the
Asta.
hotspot.
Asta, there we go.
That's different altogether, so it's been
I
flipped
thought
twice.
I
Can we-
thought DeFi Llama got rid of Asta. I thought they took Asta off. There was definitely a story about how they were like, Asta is just replaying Binance volumes. It's not real, and they got rid of it.
Yeah. Can we contrast the current 24-hour volume with historical ones? Because like I said, I don't like the 24-hour volume is still pretty crazy. I mean, we got Asta there. It was at 8.5 billion. Don't get me wrong, that's chunky. But then Lighter at 7.6, and then Hyperliquid at 7.2. But like if you go back to peak volumes, I'd be interested to see if
So we've got. I'm sorry, I'm not bringing the chart up, but
So yeah, we're talking about things you can't see here. So
for
pure professionalism.
If we go 30-day volume, we've got Lighter on number 1 at 258 billion, Asta on 2 at 223 billion, and Hyperliquid on 3 at 207 billion. So those three are very close.
Big numbers.
But yeah,
Yeah, it's
Lighter
interest-
seems to be winning in the past month and the past week.
Yeah, interesting.
I've definitely got more Hyperliquid bulls in my timeline, and I see a lot of sort of negative stuff thrown around about about Lighter. Obviously, I think everyone agrees that Asta is a bit sus, at least on my timeline. Yeah, so there was 2 market makers on Hyperliquid that have kind of, because that stuff's all on chain, you can kind of see exactly what's happened, and yeah, it was like ABC and some other group that really got wrecked, lost millions and millions of dollars, and had to really pull back from the market. So yeah, as soon as you have that kind of thing happening, there's going to be less trading because markets are thinner, and people hopefully look at that and realize that they shouldn't be punting big numbers. What strikes me is the only thing that sort of says to me that that's potentially not true is that these guys who are trading on Hyperliquid, they're also going to be trading on Lighter, right? You'd be silly not to build the infrastructure to do this trading and not use all the venues that are available to you, just leaving money on the table kind of thing, if you ask me. And so why are they not pulling back on Lighter as well? Or I don't really know. Maybe it is. Maybe I am talking out my ass, and Lighter has a whole separate set of market makers that are doing fine because Lighter didn't wreck everyone during the auto deleveraging that we spoke about before. Yeah, who
They
knows?
could have just reduced fees for 24 hours, and so everyone jumps to one platform for 24 hours or something like that.
Maybe, yeah, they can do. I mean, there's like when these existential structural issues happen in the market, it's the prime time for a vampire attack on your competitor, right? You go, look, they didn't perform so well here, and by the way, we're also giving you a fee discount, and maybe here's like a cheeky loan that you can use to.
Well, it's such low friction between trading between all these platforms.
Exactly.
That you can kind of go to wherever what's hot. As we talked about capital efficiencies and the implications of these things. It's it's interesting because this is the future of where we're heading to, and that's the bit that always fascinates me is that we've got these now this emerging infrastructure, this ecosystem that allows these cool things to kind of happen. I think.
Yeah.
And that's just one of the things, like the amount of funds that can now flow seamlessly between this is just fascinating because it's we haven't seen anything like this before. Like if you think about it, like how difficult was it how difficult is it to move funds between, exchange to exchange? Like before, what did it take you 2 days,
Yeah.
right? Now we can just
Minimum.
flip in between in 10 minutes, as you mentioned before. Anyway, I'm not sure where I'm going with that. I think I was looking for a segue into our next topic, but I failed miserably. So let me just introduce the next topic, which is Asia has been designated as the new global hotspot for crypto. And this is of absolutely no surprise to anyone. And some recent surveys has suggested that Asia, of all places, and I think for good reason actually, so not of all places, for good reason, is quickly becoming the global hub for cryptocurrency. Okay, so there was a wealth report by Signum for high net wealth. It was referenced the fact that I guess of the countries that are leading the adoption of crypto, 6 Asia Pacific nations have been leading that charge. So a lot of places that are close to home: Hong Kong, Australia, Singapore have been right up the top of that list. In addition to the US, which is, I guess, now is the topic we've landed on.
Yep. No, I think there's actually a reverse segue that we can pull here.
All right.
So we're talking before about the After Dark ETF. This thing's just like the spider of segues. The After Dark ETF talked about how they were, if you would be basically down 40% if you bought at the start of the US session and sold at the end, but you'd be up 200 and something percent if you bought at the end of the US session and sold just before it started again. And what happens during the US nighttime? Well, that's the Asia daytime. And here we are discovering that the Asia seems to be the hotspot of crypto. It's like, well, no surprise. They see, it's proven in the numbers that if you buy during the Asian session, you're doing better than if you buy during the US session. I think the stat is 60% of rich Asian people have said that they're going to increase their crypto holdings, which is pretty cool. What do we do with that information? Well, we buy the NFI fund, obviously.
Because it has Nick in the name.
Well,
That's right.
I was interviewing at OzCryptoCon. I interviewed a full-time crypto day trader that does no less than, I guess, 50-minute holds and positions.
Wow.
And he was chronically online, and he was saying that if you understand the behaviors of each type of markets, you can predict. You can make your trades just before those markets wake up and make a fair bit of money in the first hour of trade of these different markets. And he said that the US flips and trades all day while Asia accumulates. And he said, so just tailoring a strategy around that knowledge has made him a lot of money. So it's very interesting, and so it lines up with this report.
Markets are supposed to be efficient. This is just so inefficient. You think like the people in Asia would be like, hey, we're all doing the same thing. If I do what I'm doing in Asian time zones during the US time zones, I'm going to make a lot more money. Why wouldn't they? Anyway, I guess markets are not efficient.
Where do we segue from there?
Do we have anywhere to segue to?
Actually, I do have to quote Skynet. He said, does this full-time day trader have to leave early to get back to his McDonald's shift?
At the moment. He does.
The answer was yes.
Yeah. So yeah, after your interview with him, did he get back to mopping the floors?
He asked him if he wanted fries with that. Look, we've gone through most of the articles, so I think we've covered off. And I definitely hope people have taken away today. There's so much good news coming out. So the price action is pretty ordinary. Which doesn't really make sense given the long-term news. It seems to be pretty bullish, and in terms of again the vibe check of going, hey, there's so much happening now, and the undercurrent of activity is as strong as it's ever been.
Yeah.
But here we are. Here we are feeling like the sentiment is
just
terribly low.
Absolutely crushed.
I don't
and
get
it's
it.
just before this is sort of the makings of the Santa rally if we were to have one. This is kind of how you'd see it line up, right? You want sentiment to be absolutely crushed. People are just about to go on holiday. I've got a bit of extra cash or a bit of extra time or whatever, and we can see something happen. Anyway, I'm not going to, obviously not financial advice, etc. But yeah, maybe if we're lucky, Santa will bring us a present.
Yeah.
So if we had Uptober, Moonvember, what's December?
Well, we had we had
We had Dumptober. I think that was the
Dumptober. I was going to say.
I don't know if we came up with what was the opposite of Moonvember. Oh, we just didn't specify whether the moon was above us or below us.
The moon's down here. Actually, so are we back next week, by the way?
That's good. Well, it's basically Christmas. I don't know if anyone will be here.
We don't have a market update going out, so we can just riff if you want. Depends on how we're feeling.
Okay. Are you here on Tuesday?
I'll be around. Yeah,
No,
I'll
I
be
should
kicking
around
around.
too. Okay, maybe we'll do it.
Special edition.
Special edition.
I mean, I'm just gonna. Yeah. Oh, we can wear our wizard outfits.
It's a cosplay episode.
Yeah.
Yeah. Okay.
Same
Cool.
Nick theme. All right.
All right, we'll give
Let's
it a
do
go.
All right. So next week we're just gonna have fun. We'll just hang out and
Yeah.
wear outfits and have fun. I don't know. Is anyone hanging around? Do we have like Skynet's always here? I know Skynet will be back. Thank you, man. We'll assume. Well, maybe you're not a man. I don't know. We don't know who you are.
We
But
could
Skynet,
provide
thank you
a
for
Google
jumping around.
link. You could wear a mask and dial in.
Oh yeah.
I could do that.
All right.
Oh well.
We're going to have some fun, and hopefully some other people hang around. Well, if people hang around, and people keen to watch, like let us know. Yeah, throw us a comment. See if you're kicking around next week and not doing anything. We'll be here.
Sounds good.
All right. Okay. Thanks for stopping by. Thank you for not saying don't come back. I guess I was genuine concern there. We'll be like, well, this Roman guy's way more fun. Damn. And I wouldn't be allowed back, but I was. So hey, anyway, thank you. And we'll see you, some of you, next week. And if not, Merry Christmas and all that. Happy New Year's. Stay safe. And we'll see you in the New Year at the very least. All right.
Lee and Nick with the moonshot flow. Dispatch live, let the market glow. Crypto vibes where the numbers show. To the moon we go, let the podcast blow. Digital coins, we dissect them quick. Blazing insights, Lee and Nick. Price prediction sharper than a sword. Macro games,